And good day, everyone. Welcome to our next session. Again, I'm Mark Johnson, your host here for VID5 Conference, brought to you by our wonderful sponsor, Laurentian Bank Securities. And we welcome to the stage at this point, Jaguar Mining. We have the great pleasure of welcoming Hashim Ahmed, Chief Financial Officer, and John Hill, Vice President of Exploration. Gentlemen, thank you for joining us this morning.
Good to be here.
Excellent. And just as we lift off here, I want to remind our audience to please let us know where you're tuning in from. We have people from all over the world joining us for this conference, day 1 of 3. And also to present your questions in the Q&A column. We'll get to that after the presentation. So, gentlemen, I know you have a wonderful tour for us in store. I'm going to step to the side and let you take the reins.
Thank you. Thank you, Mark. So welcome, everyone. It's a pleasure to join this conference again. And John and myself will walk you through some of the things you're probably aware of. We're just going to reinforce who we are. For those people who don't know the company or don't know much about the background, who are joining us for the first time, going to give a little bit of an overview of the company. And then we'll go into the exciting stuff, which is exploration updates from John, and what we are doing in Belo and our operations around Belo Horizonte in Brazil. So let's move on. Forward-looking statements. Just a note here that we will be making some statements which are speculative in nature and forward-looking, and these may relate to future events which may or may not transpire. So let's go into who Jaguar is. One of the key things we've highlighted before. Jaguar Mining has been in production for almost 15-20 years. The company has had operations around Belo, which is a major hub for mining in Brazil. We have 2 operating assets on each side of the city, very close to the major infrastructure. And we have 1 other asset which is on current care and maintenance. The Iron Quad is a very gold-rich area, and John is going to go into that in more detail, how and who is operating there, and also what's the geology of that area. But this is not some newfound area. There's been mining going on there since the past 300 years. We also have a significant amount of reserves and resources on our balance sheet. 5 years in reserves, almost 10 years plus in resources, and there's a plan to grow them. And then that's one of the key things which John is going to talk about shortly. Production-wise, the start of the year was a little bit weak because of COVID pandemic. We had shutdowns, we had slowdown in terms of our workforce. We are recovering back to normal production levels. Our third quarter production results were strong. We expect the fourth quarter production results to be even stronger. At the end of September, a strong balance sheet, $38 million in cash, and very low debt. Less than $3 million in debt. It's been almost 7 or 8 quarters that we have consistently paid dividend now. So that's one thing which is worth mentioning, that we are almost approaching 2 years of paying dividend in this company, which is the company is very proud of now, that we can return a yield of 4% plus to our shareholders. Strong free cash flow expected in the second quarter as the production level recovers and we move back to our previous production levels. So just an overview of where we are. Brazil, Minas Gerais is a state which is known for general mining in Portuguese. We have, as I said, we've got Turmalina plant, the Caeté plant, which is fed by the Pilar mine. Both of these are very close to major infrastructure around the Belo Horizonte city. Capital structure, we've got a significant shareholding, strategic shareholder, Eric Sprott, followed by almost 3-4 other shareholders, which take us up to almost 80% of shareholding. So it's a tightly held stock, but despite that, we are traded quite healthy in healthy volumes. We plan to increase our retail trading in next year as we expand our coverage. That's one of the things. Right now, our coverage is mainly with the 4 analysts, as mentioned on the slide. We've done 2 events, significant events last year. One was a 10-to-1 share consolidation, and then we started paying dividend in the second quarter of last year. So we're almost into 7 quarters of paying dividend. Going back to COVID-19 and how it impacted us quickly, our initial guidance for 2021 was approximately 100,000 ounces. But because of COVID, we had significant reduction in our workforce that could be at site. Right now, almost all of our workforce is vaccinated, and we're going back towards our full capacity in terms of production that we had late last year. So, pandemic in Brazil is also much under control now. There are infection levels, but hospitals are not overwhelmed with that. So things are returning back to normal. One of the key areas of emphasis for us going ahead is going to be ESG, and we'll be communicating our ESG goals and our ESG framework to the market more actively in the next year. We are in the process of detailing our KPIs, ESG KPIs, key performance indicators, what our commitment is going to be to the market, and we will be communicating that actively. This just shows, this slide just shows the 4 pillars that our framework is built on, but there's going to be more communication coming up, and we'll be also communicating a lot more with respect to our tailings dam and how do we plan to close those tailings dams. We have an active project right now going on with respect to closing of one tailings dam at Turmalina. So we'll be communicating that good news to the market as well. So at this moment, we'll play a video about Jaguar, its assets. We've recently completed this video by Moon Patrol. This is the first time the market is seeing this video. This is going to be posted on our website as well, and it is an excellent overview of our operations, our ore bodies, and what Jaguar has to offer. Followed by that video, John Hill is going to walk us through the exploration slides.
Well, hi everybody. Hope you enjoyed that video, and I want to reiterate that's the first time anyone has seen that public. So one of the highlights of that video is really to demonstrate the position of both geologically and the infrastructure that Jaguar has in this emerging and historically endowed greenstone belts of the Iron Quad. I'm just going to take you through a few slides now, really to show you where Jaguar is at from the point of view of mineral resources and mineral reserves. We are about to update those in March next year. So as we stand now, we've completed over 70,000 meters of drilling in the past 12 months, and that drilling will largely go to the next resources and reserves update. This map really just shows where that drilling has been focused within the red shapes there. Around our mines, within our mines, historically, we've really focused on within our mines. That's 2016, 2017, 2018. Really, that was all about building a resource and reserve inventory that gives us 3 to 5 years of headroom at both mines. And having established that with drilling programs in the mine in recent times, with the benefits of the added cash flow that's become available as Jaguar has moved through that period, we've been looking further afield within that strategic land package. This is an image of our Turmalina mine. We've been focused on just replacing reserve as it's depleted on an annualized basis now, so we don't have to add 2-3 years in one hit like we were faced with in 2016. Now we have on an annual basis just to replace the production, so 50,000 ounces of production per year. So we do that and focus on quality, and in recent times more in the higher levels of the mine, specifically in ore body C. And that's really because of our growth aspirations to access our finer growth project, which you might have just noticed on the video, which is a kilometre along strike of our Turmalina mine. Just moving across to Pilar, same sort of situation. This year we've done 20,000 meters of drilling at Pilar, laterally and at depth. Laterally to look at increases in productivity, and at depth to add life to the operation there. The real story at Jaguar really has been since 2020, our exploration budgets have increased 3 or 4-fold. 2020, our budget started off the year at $3 million, ended the year at $6 million. Last year, we started at about $8 million of budget, which we forecast this year to be about $12 million, and next year we're looking at in excess of $10 million, which will probably grow on the basis of success. So the real thing with our new mineral reserves and mineral resources update in March next year is we'll be including for the first time resources from our projects at Zona Basal and Caeté Brown Down, which were sort of reported earlier in the year and late last year as sort of new areas, new discoveries, if you want to talk about those as such. They are 2 oxide deposits very close to our plants, and at the moment at Turmalina and Zona Basal, we're completing 8,000 meters of infill RC drilling there. Caeté Brown Down, we're busy just finalizing the resource model and sending the data off to our independent consultants, RPA SLR in Canada. So that will be included in the resource update next year. The next slide really talks to, firstly, the Caeté Brown Down project, where we've drilled about 10,000 meters so far on that project, mainly focused in 2 areas. One is at surface on oxide targets, and then stepping out to look at the depth potential on high grade structures and sulfide mineralization. We've had some success. It's quite complex structurally. We've done a lot of oriented core. We're busy with structural analysis. We're doing a lot of geochemistry, and next year we're going to do more drilling at depth to hopefully expand the footprint of that project. Just to reiterate, we focused on oxides because it's 5 kilometers from our CCA plant, which has in excess of 1,000 tons per day capacity. So ideally, we'd be pushing this project, permitting, allowing to move that into a production scenario over time. Moving to Zona Basal, this is a new area, 8 kilometers by road, or only 2 kilometers in a direct line from our plant. As I've mentioned, we're busy completing 8,000 meters of drilling on that property. The first 6,000 meters was at 50 meter by 50 meter grid to 50 meters depth. We're targeting a sort of an oxide blanket, which is overlying more constrained structures that plunging to depth. On the back of that drilling, we've added another 2,000 meters, which we're busy now to infill to 25 meter centers on several core areas, just to give us closer spaced information and also to support the resource classification that we're busy with at the moment. Moving still at Turmalina, but closer to the mine, we're really focusing now on the Finer project, which is a kilometer along strike from our current mining areas at Turmalina. It's got a historical resource, as you will probably recall, of about 500,000 ounces at 7 grams per ton. We've done metallurgical test work that gives positive recoveries via a flotation process, and we're kickstarting a infill drilling program there in January, which will be about 15,000 meters, just to bring that resource to indicated classification, and to trigger a pre-feasibility study, which will fast track. The important thing to notice about Finer is that we don't need additional permitting if we access it from our existing underground mines. So that is why, apart from its high grade, that's why we're fast tracking this particular project. In parallel with that, we are investigating the strike further to the north towards another historical resource called Pontal. We've had some drilling success there, which we'll message between now and March next year when we get final results back from our laboratories, our external laboratories. And this is all pointing to a very exciting growth opportunity next to our Turmalina mine. And as you're aware, we still have in excess of 1,000 tons per day of capacity at our milling circuit there. This is a long section just to show you where we're mining at the moment, ore body C and W. We've got a tunnel going across to Finer at the moment, and really the infill drilling on the yellow area that is on this section is where we're focusing on in January. And the other main thing for that drilling is to provide samples for metallurgical test work, so that we can refine the process flow sheet and the capital estimate and the associated project costs, and get that through into a pre-feasibility format. Also to message is that we're going to restate the Finer resource based on studies that we've done during this year on, with increased gold price and recoveries. And in addition to that, we'll be restating the Finer resource and bringing back into inventory two other areas, our Roça Grande mine and our CPA mine, where our current mineral resource and mineral reserve inventories don't include those two historically mined areas. They'll be coming back into the resource inventory in March next year, based on studies that we've done and reviewing the gold price assumptions and costs and other metrics. Just moving to our other exciting exploration programs. This year we've started drilling at a number of targets at our Iron Gold joint venture. You'll recall our mapping and early stage generative programs over the past year have found a new extension previously unknown to the greenstone belts in the quad that have hosted a lot of historical gold projects. We've added into our inventory targets that occur over over in excess of 50 kilometers of strike within that green polygon that you see on this slide. The yellow dots are actually targets and gold occurrences that we've mapped and sampled at the surface, and we've done about 5 drill holes to date on the project, and we'll be messaging results from those as we get them back later this year or early into the new year. But the other thing is, if you just want to go back to the slide previously, is this area to the south, Congonhas, that's targeted to start generative exploration next year. We're building a new team to go down there, do the generative phase of exploration, and this is an area of a lot of historical Portuguese, very impressive open pit workings on major regional structures. So we're really looking forward to unpacking that and getting into the data and onto the ground there. Okay, so really in a nutshell, in March next year, we'll be messaging and updating our mineral resources and mineral reserves after, I think, a 2-year period since we've previously updated our 43-101 reporting. Included in that will be updates for both mines, as well as restating of resources for Fina and Pontal based on updated metrics and gold prices. We'll be re-including resources for both the CPA and RG mines, and of course we'll be for the first time including maiden resources for both Zona Basal and Correga Brandão. So in a nutshell, Jaguar is really well positioned now to, with a stable production over the next few years, building up to our fill the mill strategy to utilize our excess capacity and infrastructure, 6,000 tons per day, permitted infrastructure. And our exploration programs will continue to churn our portfolio of targets across the 56,000 hectares of prime real estate that we're exploring at the moment. Thank you.
Okay, thanks, John. Just as a closing comment, I want to re-emphasize what we promised. I remember John and I, we were presenting last year, and we said the free cash flow that Jaguar generates, we've got an estimate that 1/3 of it should go to growth, 1/3 should go onto a balance sheet, and 1/3 should be returned back to shareholders. Despite the weakness in production that we had earlier this year because of COVID and some other external factors, we have continued to pay dividend. We've paid more than 1/3 of our free cash flow in dividends, so that's one of the very positive things. We've continued to invest in exploration growth. Our balance sheet has maintained the cash strength and liquidity strength that we finished last year with. So, Jaguar is in a much better position despite going through some challenges earlier this year. And we are really set up to increase our reserves and resources next year with all the drilling that has happened this year. Some of our board members, including and myself, we were down in Brazil last week. We went with John to all of these sites, and we saw the amazing work that John and the exploration team is doing. I have never seen Jaguar and the exploration team so excited with having so many hot targets that they're drilling right now. So this is a very, very exciting time for our team and for the company overall.
Wonderful, gentlemen. Thank you very much for a great, well-rounded tour at Jaguar Mining. Really appreciate the inside perspective and a bit of a look ahead. So I know we have two wonderful voices here from the company in terms of CFO and VP of Exploration. We'll probably dance between the two sections as our Q&A comes through. A reminder to our audience as well, please drop your questions in the Q&A column, and we'll get to as many as we can before the top of the hour. So Hashim and John, we'll just step in right at this point to the Q&A section. I want to also note that your Q3 financial results obviously came through looking with a very strong balance sheet and cash flows from operations and explorations, Hashim. One disappointing aspect of Q3 was the increase in operating expenses. I understand the main contributing factors were inflation, increase of 15% or so in tons mined and milled, and the additional measures of health monitoring, hygiene, and distance during the pandemic. Can you give us your overview as CFO here on where things are financially, just top notes of the company in terms of financial strengths?
Yes, so good points there. I mean, I think one of the highlights that I would definitely want to talk about is inflationary pressures on the cost. So the first half of the year was a bit of an anomaly because our denominator was down as well. But as we go back towards normalizing production, it's important that our numerator needs to be controlled as well. And what we've seen that the total cost has gone up. It's not only Jaguar; it's across Brazil, and more likely than not, it's global. All mining companies are going to face this or are facing this. That being said, I'll give you an example. The fuel cost in Brazil in the past 1 year has doubled. Right? So that kind of a thing feeds into everything else. So you've got your consumables and you've got your food cost and you've got your labor cost. So everything goes up. So it is definitely a pressure we are looking close to. We are working with almost all of our suppliers and keeping inflation down to more like 7 or 8% for next year. That's the expectation that the market has as well in terms of next year's inflation. We're going to look at a number of 7 to 8%. It would be, I think, quite the success for Jaguar if we are able to manage and deliver in that inflation. That being said, next year is an election year in Brazil. Generally, in election year, and John can allude more to this because he is in Brazil, but Brazilian real does weaken significantly in election year. There's a lot of volatility. And I think Jaguar has an upside which would give us some benefits there against inflation. So, you already can see the average FX has declined from 5.25 earlier in this year to 5.6, 5.5. That alone gives us a significant benefit on the inflationary cost pressure in US dollar terms.
Right.
We are expecting, and not we, I would say, I would qualify that, the economists are expecting that the next year's FX is going to be between 5.5 and more likely somewhere close to 6. If that happens, we are going to see, relief for some of those inflationary costs in US dollars. So there are some favorable headwinds for us in terms of managing our costs, and including that, we internally are doing a very focused review of how we can manage our costs, and you will see that demonstrated in the Q4 results as well.
Okay, thank you, Hashim, for that. I'm going to ask a question here that kind of touches on both columns from the CFO and VP of Exploration, so perfectly timed here. How much would you say would be spent on exploration at Jaguar Mining in 2022?
I mentioned we just had our budget session in Toronto, and we've got $10 million earmarked for generative exploration. On the basis of some of the other programs, the growth programs, for instance, the infill drilling at Zona Basal and at Fina, there's another $3 to $4 million that's been earmarked for that. I would imagine that if things continue and results continue to flow, that would be a moving number upwards and outwards. based on how we've seen things going in the last couple of years. I did mention only 2 years ago we started the year with 3 million a year, and then we've doubled that every year since then in terms of expenditure. And I didn't mention that our exploration team is now 80 members strong, as opposed to 30 members strong 2 years ago. So we've really resourced up our people and our staffing to maintain a significant focus on exploration and growth, and with the drill bit at Jaguar.
Excellent. Thank you for that, John.
And I want to add to that, Mark, that as I said, I was there last week with our board members, and I have never seen such a young, driven team in exploration. As John mentioned, 80 plus people. We went to the core shed. We went to Zona Bazal and Fina. We looked at the drill rigs. The action is happening, and we are so proud that the team that John has been able to build, and that kind of talent is hard to find these days. And we are fully supportive of providing the liquidity to increase our reserves and resources, because this is the future. Exploration is the future for the company.
Yes. Wonderful. Thank you for that, Hashim. Appreciate that. Moving over to a question from Barry Allen, a great colleague of ours here. If we were to rate the exploration satellite occurrences, which is the nearest to production, and when might that be?
Yeah, that's a very good question, because it's all about permitting. Hi, Barry. And so Zona Bazal is the most advanced. We're infill drilling there. It's very close to the plant. We own a portion of the surface rights. But once again, the permitting process, we expect only 2 to 3 years. In that type of time frame, unfortunately, we'd like to bring it forward. There are potential sort of other ways to try and speed up the process. There's trial mining licenses and that we're investigating. But the main reason the main project, it happens to be a very good project, is the Fina project. And the reason that's going to be in production, relatively sooner, because we don't need to permit that materially in terms of a surface operation. We're going to access that from underground. At the same time, we need to build a float plant, and we need to look at whether to sell a concentrate or to build a POX plant or a refractory plant to oxidize that concentrate. So I can't elaborate any more than that, but it's front and center that these projects are all very important to bring through the process of permitting into production as soon as we can, because we have the excess capacity.
Excellent. Thank you for that, John. And actually, it's a great springboard to the next question from Marco. Did Jaguar already apply for various mining permits for new zones due to the long delays in obtaining them?
Yes, I can affirm that. We have a dedicated team who have that role to play. They've just delivered a permit for our Pilar mine to increase daily annual production to 500,000 tons per year, up from 450. So that was done in 9 months, as opposed to the usual 2 to 3 years. So we're confident that we have a team that can understand and deliver on the permitting. But once again, it's like anywhere in the world. There are headwinds in terms of getting things permitted, unfortunately. But we've also, I must add, we've got a dedicated growth team that will be. We have a leader, and we're busy building the team under them in terms of the discipline heads and support. And the exploration team is handing over projects to that team as we speak.
Very good. Thank you for that, John. Another question here from Marco. What measures are Jaguar taking in order to limit the inflation costs we've spoken about? For example, oil hedges, electricity. What sort of ingredients are in play?
So a couple of things we're doing here. Namely, we are renegotiating our contracts. We are going back to almost all the suppliers and pushing back on cost increases. So that's one thing. We're looking globally for some of the procurement as well. Now, that's still a challenge because the supply chain is constricted.
Yes.
That being said, our active negotiations are with the suppliers. I'll give you an example. In most of the cases, we've been able to bring, for the most recent contracts, bring down costs from where the supplier was asking almost a 15% increase. We were able to bring it down to around 7 or 8%. That being said, fuel is one of the things which we don't control, right? It's dictated by the government.
Yes.
So that's one of the things which flows through almost all other different cost centers as well, indirectly. So our best target is to increase our productivity. Our CEO, along with John, are working actively on how do we reduce dilution, how do we reduce ore losses, which by default improves our grade, which by default brings the cost down. So that's an extremely important measure which goes into cost optimization. John, you want to elaborate on grade control and your team?
We have an active ore quality control committee, and they're focused on controlling dilution and underbreak, which are two big measures that can have major impacts. And we're already seeing benefits from those efforts. So across the board, we are working on quality. We haven't always been as good as we could be, and there's always room to improve. But we're doing focused interventions, and we're actively seeking the skills and the workflows that talk directly to cost containment and quality. Really captures everything.
I appreciate that. There's no room for complacency at a good company. Absolutely. Yes. Perfectly said.
Mark, another important thing is, as I mentioned, although we don't rely on FX being one of the key measures that we should be expecting to weaken, there's a strong forecast of that happening. So that's almost a 10% decline. Even if it goes from 5.5 where it is right now to 6, that's a 10% decline almost. So we think most, if not all, of the inflationary pressure is going to be offset by that. But either way, there's a lot of focus on cost control within the company going into the next year.
Excellent. Thank you for that perspective, gentlemen. Next question comes out. Any thoughts on mergers and acquisitions given the recent takeover of Amarillo Gold?
So interesting transaction that happened there. We won't comment on that transaction itself, but I think our management and the board of Jaguar is actively looking at assets within Brazil, and to a certain extent in South America. But Brazil being more of an interest for us because that's where synergies would work. We haven't found anything which we think is right now ripe enough for us to move towards. When you've got such a big land position, as John has given us an overview of, you've got almost 4 or 5 hot targets, and these are not even targets actually. I would say these are early stage, discoveries to a certain extent.
Okay.
And you want to build up those reserves and resources. The return on those investments are really difficult to trump to go out and buy something, right? So with all that on our plate and with all that in ahead of us, I think our priority is going to be internal. That being said, I mean, there is definitely an active review of what's out there. We haven't just found what I would say we're looking for, or at a price at what we're looking for.
Very good. Hashim, thank you for that. We spoke earlier briefly about the election coming up and generally the government that's in charge. And as things come, there's a bit of volatility. We know that's a natural process whenever elections come through a jurisdiction. But how safe would you say the Brazil mining industry is with the change of government, especially for Jaguar in the Minas Gerais location?
John, you want to comment on Brazil as you're more close to this, the politics there?
I think there's always a certain amount of sort of country risk, but Brazil has got very strong mining laws, and the people who operate here are international companies, and they operate to international standards.
Mm-hmm.
They hold the governments accountable to maintain the sort of peace, if you want to call it, or the support. Minas Gerais is home to not just Jaguar. We've got Anglo Gold Ashanti, we've got Vale, we've got Nexa, we've got a lot of major other major companies that are all here contributing very strongly to the economy. So even though the politics will there's a lot of verbiage that's spread around, the underlying thing is the profits and the taxes that these companies are paying into the local economies. And I think that alone in the post-COVID world is a reason to protect there'll be a reason to protect that at all levels of government in Brazil. I'm not a politician. I'm Australian. I can't even vote here. But I really think, just looking at the investment in the exploration space, the deals that are being done, some pretty major deals. Sibani, for example, just taking over Appian Capital's project in Brazil for $1 billion deal. That's not a signal of a company or a country there that people are particularly concerned about in the short to medium longer term. So that I'll leave it at that. I'll stick to geology and try and keep finding some answers.
Very good.
I think that's the cue there, Mark. When you see investments in mining flowing into a country, we don't think that there's a loss of confidence, right? And we've seen two or three significant transactions happen most recently within Brazil. So we think that's a vote of confidence towards the stability of the country.
Very good, Hashim. Thank you for that from both of you. Question also here comes from Marco. How confident rather are you in a 10-year mine life with resources at around 100,000 per year, best estimate?
I'm very confident. We've got 1.5 million ounces of resources in inventory already. We've got 500,000 ounces of reserves, and we have these unreported or resources that will be coming into inventory in March from Roça Grande and our CPA, as well as restated resources for Fina and Pontol, and two new resources coming in the oxide space. So I'm very confident in that at those sort of current production rates, 90 to 100,000 ounces a year, we can maintain with good confidence a 10-year mine life. Obviously, we want to increase productivity, and obviously, if we start filling those mills up, our resources will be depleted at a more rapid rate. That's why we've accelerated our exploration, because we're going to build a much bigger resource base, convert that to reserves, and get that into production over the next few years. But where we stand now, we have a very solid resource inventory in Jaguar.
Wonderful. Thank you for that very much, John. Let's do a little bit of a look ahead perspective. If we were to look at key dates and markers in the timeline at Jaguar Mining over the, say, next 6 to 18 months, what should we be looking for as investors?
So I can tell you, I'll give some overview, and then John can add the exploration flavor to that. But we're gonna be actively working on getting the reserves and resources out, which is John's target for March next year. Building on that, there's metallurgy coming back from Fina, which is then feeding into a pre-feasibility and then a feasibility study. There's a ramp underground, which has started already from Fina underground deposit towards Turmalina towards Fina, which is going to give us an underground access to that. it makes our permitting process way easier. Then on top of that, there's permitting announcements itself with associated with Fina and Zona Basal, and then bringing Fina into production is what the plan to lay that out. How we do that, what kind of capex we will need. As John also alluded to, it's refractory ore, so we will need some modifications to the Turmalina plant. So what kind of capex that's going to be, we'll communicate that to the market. We'd also communicate to the market what the timing of that capex will be. But there's significant news flow, and then John is working on, of course, Zona Basal, Puntal, Cohego, Bandão, which is 3 very, very attractive early stage deposits which are already in the pipeline. And there's plenty of news that is associated with those that's going to come through. John, do you want to allude more to what you think is in the news?
Yeah, it's a very key year next year, because once we've got the first updated the resources, that's the starting point for everything. In terms of Fina, for example, the resource there is largely inferred. We could sort of publish a PEA type document fairly soon, but we basically want to do the infill drilling and scope the sort of pre-feasibility before we message that. Because there's a lot of moving parts with respect to that. But ideally we want by the end of next year to see progress on the three main projects, the 2 oxide projects at Zona Basal and Cohego Bandão, and the underground at Fina. Notwithstanding that, inside the 2 mines, we have growth projects for incremental productivity increases. The CNW project at Turmalina and the Southwest project at Pilar, both basically focused on adding shallow, lower cost ounces to the production profile.
Okay.
And then exploration really is working in 2 areas. One is moving a whole host of exploration targets, up the portfolio through drilling, diamond drilling. We've got a lot of diamond drilling planned for next year, and then to continue with generative work to feed the bottom of the portfolio. The lower end, where you need hundreds of targets to progress up the the triangle or the portfolio that you want to, however you want to sort of show that. So, in a nutshell, we're being driven by the fact that we've got the infrastructure, the 6,000 tons per day of capacity, trying to fill that up as fast as we can.
Mm-hmm.
Notwithstanding permitting, the projects are sort of lined up and ready to move forward, and we're focusing on getting teams in place that have the requisite skills to actually bring those to account without distracting from the production that we need to maintain to pay for it all.
Very good. A good bird's eye view there. Thank you, John and Hashim. We always like to open the door to anything we've missed in this session. If there's something that comes to mind that our audience has not heard from either one of you, we just want to provide that opportunity for something else that needs to be shared before we close out towards the top of the hour.
No, I think what I would say is almost all gold mining company stocks have taken a beating. Jaguar is trading even below those levels, earlier levels of last year. Yes. And I think people were shaken a bit by the COVID-19 virus and its impact on our operations, but things are returning back to normal. They have returned back to normal at our operations in the 3rd quarter to a certain extent. Mm-hmm. If you look at our earnings for the 3rd quarter and you look at the multiple of those earnings, we are still trading at, I would say a significant discount to those earnings. Mm-hmm. So, all I would say to our investors is this is still a good time to get back into the stock, get some dividend, and there's more exciting news coming for next year, which is going to accrete more value into the stock.
Very good. Hashim, thank you for that. John, anything from you as we close out?
No, just for people to go back and relook at the video. I think if they look at the video, that's where it stands now. If we re-release that video post March next year, people will be pleasantly surprised with the changes they see.
Okay, very good to know, and a little bit of a tease there. Always good to leave them hanging, and I appreciate, gentlemen, your inside perspective at Jaguar Mining. I want to thank both Hashim and John for joining us today. And as we close out here, folks, I want to remind you that as we close this webinar, of course, you'll be moved over to a survey. Please provide your thoughts. It helps us do a better job next time. And that at the top of the hour, you will be lovingly redirected to our next guest. We have Argonaut Gold joining us at the top of the hour. So Hashim and John, thank you for your time. Our very best. Stay safe, and we welcome the next opportunity to journey with you. Thanks for your time.
Thanks very much, Mike. Thanks, everybody.
Thank you.
Bye.